One renowned retirement expert and former Goldman Sachs banker is stepping forward and revealing his number one way to beat inflation. It's a way to receive a nearly 10% yield from the government with virtually no risk. Folks who take the 3 simple steps he's sharing right now could receive nearly $1,500 from the US Treasury in as little as a few months. Best of all, it's guaranteed by law, and you could pay 0 taxes on this low-risk investment. Considering how rapidly inflation continues to soar, you don't want to waste any time missing out on the potential profits he believes are in store for this investment. So to get a copy of his new free report with all the details, simply go to beatinflation2022.com. Again, that's beatinflation2022.com for a free copy of his new report. Here we are at the Swiss Mining Institute in Zurich, and finally face-to-face with Willem Middelkoop of the Commodity Discovery Fund and the author of The Big Reset. Willem, always good being with you, finally in person.
Yeah, after all these years.
After all these years, face-to-face.
You felt like a sister to me already.
Like pen pals finally meeting, right?
Yeah.
Well, it's so nice to be with you here at this conference.
Amazing place,
conference. The Dolder Grand, a historic place set in Zurich. And wonderful, like I said, to finally meet you and have a thorough discussion with you today.
And so many people here.
So many people.
Jesus.
So what does that say about the state or the barometer of the industry right now?
I've been coming here for 5-6 years. I'm born in Geneva.
Yes.
We live in. I have a house in Switzerland. Of course, my base is in Amsterdam, but I love to travel here. Been doing quite a number of keynotes here over the last few years. And then, if you were doing the morning keynote, there were 35 old grey men sitting, listening, because most of them were, I think, former bankers who were pensioners and just were private investors in the mining space. And yesterday, it was standing room only.
I
for
know.
a rule. 300 people in the room.
Yes.
8:30 in Zurich.
Incredible.
So
incredible.
The times are changing.
The times are changing, and we're going to talk about mining, the precious metals later in the interview.
And commodities.
But first, I want to talk, obviously, everything that's happening in the world. We're here in Europe, like I said, where the World Economic Forum just concluded. Against the backdrop of fuel shortages, food shortages, and what you predicted last year, superinflation coming. I guess,
well, we have it now.
And we have it now. So you properly predicted that over a year ago that that's where we would be. So
that was an easy one.
So we have all these crises taking place, right? You had said there's going to be 12 crises, but there's 3 that you're really focusing on right now.
I would coin it mega crisis. It's mega crisis. So that's food crisis, energy crisis, and war, geopolitical crisis. And I think governments and central bankers are almost panicking because they solved each and every crisis in the last 20 years by printing more money. You can print as much money as you like. You can grow the balance sheets of central banks as far as you want. There's no limit. You can grow a central bank balance sheet. But once people lose trust and once inflation kicks in, you can't do anything. You need to raise rates, but you can't raise rates.
Well, let's talk about that because that's exactly what's happening in the U.S. where they're actively raising rates. Why do you say they can't raise rates?
Well, they're actively raising rates from 0 to 1%.
Right.
Paul Volcker, he needed to rescue this system in 1980 by raising rates to 20%. And we need to go back to a little bit into history. We had the start of this dollar system, Bretton Woods, 1944. The dollar as good as gold. The dollar was fixed to gold.
Yes.
That went well until the 1960s. Then the US printed too much money. They lost control over gold. Gold went to $800, from $35 to $800 in a number of years. There was a dollar crisis. There was inflation in the 1970s. Paul Volcker needed to rescue the dollar system. He did. And then we had 20 years of declining interest rates. So then, after 1980, we had 20 years of declining interest rates. Gold was coming down. And then we had the start of the first crisis in 2000. The tech bubble imploded. Then we had the second crisis in 2008, the real estate crisis. Right. And then we had the third crisis that was in 2020 around COVID. And we solved all these crises by printing money. And now, yeah, the buck stops here. Now they're trapped.
Now they're trapped. And it's not just the Fed, the ECB, central banks around the world.
Because you can only solve this situation by raising rates towards, well, north of 5%. Rates should go up to 7, 8, 9%. Look at other countries in the world. They're raising rates to those levels to bring inflation down. But now they need to bring inflation down, but they can't raise rates to 10%. So what can they do? The only thing they can do is create a recession, create a soft landing, and that's what's happening now.
So are we already in the recession, or how far away are we from that?
Well, Jamie Dimon this week scared markets a bit by saying, prepare for the coming storm. And he said, I don't know if it will be a summer storm or it will be a Hurricane Sandy, but it's getting tough, especially I think next winter, because then we have this energy crisis.
Right.
The energy price will still be too high.
Well, that's what we were talking about. Here we are in Europe, where people are going to be paying, 100, 200 euros more for energy. I mean,
per month. And here the rich countries like Holland and Switzerland, we don't like it. We can pay it. But look at the Eastern European countries, or countries like Lithuania, Estonia. Poor people in Romania, they can't pay this. So there will be a huge crisis next winter. And you can even have this food crisis. If you see what's happening now in Lebanon, in Africa, there are some real food issues already starting, and this just a few months after the war started. And this war won't be finished soon.
It won't be finished anytime soon. So speaking about Eastern Europe, we see Poland, Hungary, Czech Republic, all buying gold, all have been buying gold. Haven't they been preparing for this moment?
They know what's coming. They know central bankers are trapped in a way. They know there's a huge debasement of currencies. The countries you mentioned is very interesting because they are part of the EU, but they're not part of the monetary union. They don't have the euro. They still have their own currencies.
Right.
So the Eastern European countries who are part of the EU but are not in the euro, not using the euro, are growing their physical gold holdings by incredible amounts. Poland increased it 10x. The Czech Republic just announced they will increase it the next few years 10x, and Poland doubled it. So that's a real sign that they start, when central bankers start to flee towards gold, they're the guys who can print the money. Right. And actually the Czech Republic got rid of almost all of their gold around 2000. And you should never forget that the US advised all Western countries to sell their gold holdings in the 1990s. They never sold 1 ounce themselves, but the Canadians sold it all.
All their gold.
The UK sold all of their gold. The Dutch sold half of their gold. So there's a huge shift, and central bankers actually started to accumulate physical gold again after the Lehman crisis in 2008.
Yet mainstream media does not want to cover gold. Don't you find it interesting how Wall Street is not embracing gold? Willem, no one's talking about how, against the backdrop of the crypto winter and the S&P, gold is,
but gold is the anti-dollar. The dollar used to be connected, backed by gold. That was Bretton Woods 1 in 1944. Then in 1960, they tried to keep the gold price fixed at $35 per ounce. And they organized it through the London Gold Pool. It was an agreement of Western central banks to dump some physical gold each and every week and month to keep this gold price fixed to $35. Then in 1968, France didn't want to do that anymore, and they got out of that agreement. And that caused a crisis for the US dollar. And then in 1971, President Nixon needed to take the dollar of the gold standard. So from that background, gold is the anti-dollar now. And that's why the undertitle of the big reset is the war on gold and the financial endgame. So there's always this war on gold from the financial institutions, from Wall Street. So they will never advise it. And it's shocking to see, and we all know there have been so many studies on this topic. The gold price being managed by selling a lot of paper gold through the future market, through the COMEX.
And I want to get into that with you. But first, just going back, you mentioned the reset. I guess, with all these crises, is that the road that we're being led on? Does this lead to the reset?
I think we're in the reset. We discussed this before. But there was a very good study published by Credit Suisse, Sultan Pozar, who's a former Fed guy. And a few weeks after the start of the war in Ukraine, he published 3 reports. And actually, the title of his report is that we're witnessing the start of Bretton Woods 3. So Bretton Woods 1 was 1944, Bretton Woods 2 was 1971. And he said this is the start of a new monetary system around commodity-oriented countries in the East. And he's pointing to Russia and China working together. He calls the People's Bank of China, the Chinese central bank, the central bank of all commodities, because they can do all the arbitrage now. So we here in the West don't want to have the commodities from Russia now, but they all go to China. So China can keep all these commodities for their own use, or they can sell them. So China is getting much more powerful without firing a shot. And this Credit Suisse report clearly states that we're witnessing the change of the international monetary order. And it's now all around commodities. And the Eastern countries like China and Russia say, these are our commodities, it's your problem.
So with the reset, who wins, who loses, who comes out on top?
The West loses. And we're still quite arrogant, because by all the sanctions we imposed on Russia, we think we have Putin cornered.
Right.
But if you study the sanctions, there are only, I think, the Western countries, which have 1.5 billion people living there, who agree on the sanctions. And there's 6 billion people living in countries in Latin America, Middle East, Africa, Asia, who don't support sanctions. So the West is a minority. But we still think we can make the rules for everybody to play. And now there's a huge disconnect between the West and the rest of the world. And if you listen to commentators on TV in China, in Middle East, and also India, they're fed up with the double standards in the West.
Yeah. Absolutely. I mean, everything you're describing is it's an utter mess. It's an utter disaster.
But it's scary.
It's absolutely frightening. And does this make, going back to gold, doesn't this make this case for gold stronger? Let's talk about that.
Yeah, during our interview last year, I mentioned this example of a Dutch pension fund who sold 10% of their bond holdings after difficult discussions with the Dutch central bank and other regulators. And they exchanged their bond position, they bought physical gold and real estate. So now you're in this world with investments of over 300 trillion looking for returns. They can't find any returns in bonds, they can't find any returns in stocks. Stock markets are in a correction now, crypto has crashed. So it's a huge problem. So it's no surprise that some of the investors are starting to look to assets without any counterparty risk. And the Czech Republic, the central bank president, a young, new incoming central bank president in the Czech Republic, he said, we're buying gold because it doesn't have any counterparty risk. And look what happened with Russia. If you confiscate the assets of a sovereign country, well, that's the best message for somebody to buy gold and store it themselves.
So Willem, I'm sure the folks watching are going to say, well, when is this going to be reflected in the price of gold?
Well, I've been waiting for a few years for a gold revaluation. It's part of the big reset thesis. So we'll have a gold price revaluation one way or the other, or through central banks who will decide to revalue gold, because they all have gold on the balance sheet. So their balance sheet looks better when you revalue gold. James Rickards is somebody who's been saying this for years.
Yes.
Actually, I stole the idea from, thank you, Jim. So we should get a gold revaluation. Actually, we've seen a gold revaluation to start already, because don't forget, in January 2016, gold was $1,000. and now we're around $2,000. And we made this triple top around 2000. Once we break that barrier, it's off to the races, and you can have a very sharp, quick rise towards 2,500, 3,000. And what's interesting, the move for gold in dollars is always the last one. We already seen a breakout for gold in yens. We've seen we'll show the graphs.
Yes.
We've seen a breakout for gold in euros as well.
Yes.
So the last one, which always starts running, is the gold price in dollars. And then we'll see a reevaluation of this whole precious metals complex. Because if you look at this conference now, the undervaluation for exploration companies and junior mining companies is incredible. So there's a huge revaluation coming. And that's what we prepare for as investors.
I want to learn more about that. But offline, we were talking about how you could see, or a possible breaking of the COMEX.
Yeah, because we know the gold price is managed by selling all these futures,
right,
all this paper gold and silver through the COMEX. But if you study, I have a graph. We can show the graph that there's been quite a bit of outflow of physical gold from the COMEX since 2020. So the COMEX used to be a paper gold trading system, but now the physical gold is being asked for, and I think we'll have a lot of stress in the physical markets, also in silver, platinum.
Right. So
in palladium, we already had this shortage.
Basically, you're saying there's not enough physical metal to back the paper.
No. And you've been in this industry for a long time. Even in your previous job, maybe you weren't allowed to discuss this, but there's a lot of paper out there, and many of those ounces have been sold several times. And now you've got a war, now you've got superinflation, you have this mega crisis, there will be huge demand for physical gold, and people want to own it themselves. They no longer want to have a piece of paper saying they own it somewhere.
You would never buy paper gold.
And I would never touch a pool account or whatever. Always allocated gold only.
Okay, and
silver.
And the mining stocks.
And Bitcoin as well.
Okay.
That's my private portfolio.
Yes. Okay. So
and some real estate.
So let's before we talk mining, let me just get your thoughts on the volatility and the pressure we've been seeing. Bitcoin, obviously, it's come back up from a little bit from where we were. But is this the start of a crypto winter? What's your thought on the cryptocurrency landscape?
Well, if you study crypto, you have these very strong cycles, and they are much faster than in commodities.
Absolutely, yeah.
Commodity
it's the
cycles,
DNA.
It's decades. The cycles in cryptos, it's a few years. If you study the cycles, we had a top last year in 21. We're in the winter now. Look at all the altcoins and what happened to Luna. They go to zero. Bitcoin, I think, is a buy under 30. We could go down to maybe 22, 23,000, but then it's a serious buy. I'm adding at the moment myself because I think this crypto winter will be over in a few months, and then I expect a strong jump towards 100,000 at least.
Let's wrap by talking about mining companies. You're saying the undervaluation of them, so they're cheap now, basically. Right.
Let me give you one example.
Yeah.
Lucara Diamonds is here. Era Thomas,
yeah,
a great CEO, female CEO. It's the best diamond mine in this world. It's in Botswana. They find these huge stones, which they sell for 40, 50 million each. The market cap of that company is 270 million. Their PE ratio, price earnings, is 6. It's incredible. And prices of diamonds are rising fast because 30% of diamonds came from Russia. And nobody wants to touch them anymore. So there are amazing opportunities in commodities right now.
So I guess we just thrown a lot of information at the
Maybe
viewers.
Too much.
We talked to reset, commodity super cycle, super inflation. Yeah. I guess, final thoughts for the viewers at home. How do you navigate these troublesome waters, Willem? It's a tough one.
Yeah. It's time to get very conservative and defensive, but many people are afraid for a huge crash of the stock market.
Yes.
And I'm not that afraid because there's so much money out there, and when we have over 300 trillion in assets, 100 trillion is in sovereign bonds, 100 trillion is in stocks. And sovereign bonds aren't interesting anymore. So the money has to go somewhere. So I think a lot of money will keep flowing into stocks. Why? If you look at previous eras of superinflation and even hyperinflation, stocks did very well. Because if you have to choose keeping your money in fiat or in stocks, stocks tend to rise with inflation, and fiat you lose.
So are you in US equities?
No, I invest 25% of my net worth in equities. Most of that is commodity related. I do some startups. I don't do general equities, US equities. I don't like the valuation.
Your main goal is to diversify so that you are not part of the banking system, right? That's kind of your ultimate.
Yeah, if you look at my personal holdings, 25% is in physical gold and silver, 25% is in cash and Bitcoin, 25% is in real estate. That's all money outside the financial system, outside the banks. And the only 25% which in the system, it's in the stock market. But I always advise people, don't put more than 25% in the stock market, because stock markets can close down. You can have very strong crashes. Mm-hmm. And I see too many, especially North American investors, who have all their savings in the stock market. That's a big risk.
I guess if I have just one final question, is some thoughts on the US dollar. Where does it go from here?
Well, we had a huge run. I think we topped for now. The US is under great pressure. They will do anything to keep a strong dollar, to keep money flowing towards the US.
Right.
But if I look to the US and to the dollar-based system from a world view, then you see there's so many problems coming for the US, and there's such a large part of this world who really doesn't accept the US as a leader anymore, and that's very worrying. And let's hope the US doesn't want to start a real fight with China, because actually I believe that we're already in the start of World War III, but it's not a kinetic war. Well, the kinetic part is in the Ukraine, but there's a financial economic war since Trump started this campaign against China.
Let me ask you this. At the end of the day, do you prefer that the US remains the superpower? Or is that what you're most comfortable with?
That's a good question, because I've been thinking about that, and that's a very difficult one, because I always, all my books are almost a fight against the corrupt US-based dollar system. And I was greeted very warmly in China, actually, at Renmin University, and my book was published. And I experienced that they liked the criticism. And but if you have to choose between this democratic system or this authoritarian system in the East, of course, you want democracy. But it's my biggest worry, actually.
US losing its status.
Yeah, and the fight. And I think the US can only keep its status as the leader of the world by choosing war with China. And that's then we really have some problems. So on that positive note,
yes.
Goodbye from Zurich.
Willem Middelkoop, I thoroughly enjoyed meeting you in person.
Likewise.
And thank you so much for joining me here.
Likewise.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.